All right, welcome back to Market Fatafat, where we are taking you through all the stocks that are in focus today, either on the back of news flow or on the back of technical charts. Let's get going with all the stocks that are in focus today then. United Breweries is in focus today. In fact, it is on the since Friday after market hours, we got the news that UP state has notified the shift in the excise duty on beer from alcohol companies to wholesalers. Now, the new notification will become effective from the 4th of December 2024. Now the wholesalers will pay taxes instead of alcohol companies, leading to decreasing of tax burden by the manufacturers, and this is likely to unlock working capital for beer companies. And on the back of that, United Breweries is in focus today. Currently, it has given up those morning gains, but nonetheless, it is trading in the green with gains of 0.2%.
Okay, so positive news flow coming in for United Breweries, and let's keep it going with all the stocks in focus. And Aster DM is the one that has been gathering all the attention ever since opening bell today, because Aster DM is going to be merging with Quality Care, which is known as QCIL, and that is backed by Blackstone and TPG. Aster DM will be purchasing 5% stake, which roughly translates to 1.9 crore shares in QCIL from Blackstone and TPG in a consideration of primary issuance of Aster shares for 3.6% stake, which roughly translates to 1.86 crore shares. Now, these shares will be allotted to Blackstone and TPG at 456.33 per share, and post the initial share acquisition, QCIL will be merged into Aster by way of scheme of amalgamation. The share swap ratio, QCL shareholders will receive 977 shares of Aster DM for every 1,000 held of QCIL, and the merged listed entity will be named Aster DM Quality Care Limited. The merger will be completed by Q3 of FY26. Now, what brokerages are making of this? Centrum is maintaining an ad rating. They've raised the target to 560 rupees compared to 470 earlier. No change in the target price as deal is yet to close, but they are positive on the deal as it creates dominant presence in Central and South India, allowing it to potentially gain patient volumes and ward of competition. QCIL also has stable margins at roughly 21%, so the deal looks value accretive for now, but you have Centrum that is quite positive on this deal as well, and the stock is, however, slightly under pressure today, 0.8% lower as we speak.
And also we have the company's Deputy Managing Director, Alicia Mupin, who's shared her views with ET Now about the merging entities, roadmap and target for the coming years. Let's go across and take a look at what she had to say.
When we look at the next 3 years, we also have a roadmap of almost close to 4,000 beds that's coming online. So it's going to be a massive platform, and the whole focus is on how do we deliver world-class healthcare. We've always been focused as Aster on clinical excellence, market leadership, and with a partner like Blackstone and with the assets from Care, KIMS, and Evercare, we truly believe that this is going to be transformational.
All right, moving on then to Sameet Chavan, who's the head of research, technical and derivative Angel One, who's joining us now. Sameet, coming to you, you picked out Varun Beverages for us on the charts. Tell us, what are you seeing on the charts for this one? Where do you see the price going up? In the last 1 month, it's given some decent odd gains, but last 6 months this stock hasn't moved much. In the last 7 months it has started. Last 1 month it has started moving us. Tell us, where does this stock go from here?
Good afternoon. Yes, as you rightly pointed out, this stock has been consolidating since last 6 odd months. But the kind of price and volume activity that we are witnessing, since morning, it appears that the stock is showing some early signs of revival. So it's a first sign of breakout, and if you look at the volume activity, volumes have been quite robust. So this provides some sort of credence to the move, and hence we expect this stock to do well. So probably this stock is likely to come out of its long slumber phase and head towards 675, 680 in the near term.
So those are the levels to watch out for on Varun Beverages. Jinay, coming to you now, you've picked out IndusInd Bank in focus on the back of a brokerage note coming in from Morgan Stanley. Tell us what the note entails and tell us why the stock is reacting the way it is right now.
Well, definitely Morgan Stanley has a note on IndusInd Bank. Well, they have cut the target price. They have maintained their equal weight rating, but they have cut the target price to 1150 from the earlier target price of 1400. Now, the stock has already fallen about 30% post their earnings owing to the MFI asset quality. They believe that the MFI trends continue to weaken and driving the EPS cuts more. Also, they believe that the risk reward is not bad. However, in near term, the risk is tilted towards the downside, and they continue to apply a 30% bear case weight, and they see that the risk reward at larger private banks are much higher than IndusInd Bank, and that is why we are seeing a downward pressure as well in today's trading session.
All right, that's IndusInd Bank that is facing some selling pressure, and so is the PSU banking pack as well. But there's optimism around the banking sector, which is growing. In general, experts see opportunities in consumers, focused lending and diversified financial institutions. From PSU banks to private lenders, the sector appears rather poised for steady growth amid robust demand. Let's go across and listen into what Hartmut Isal from UBS Wealth, Ashish Gupta from Axis Mutual Fund, and Vikas Khemani from Carnelian Asset to say about the space.
Consumers at zero growth, for me, that's a very clear opportunity here. Financials also, especially banks, right, have been a bit of a laggard for the longest time. It's also, right, that I think the softest point for them.
I think in financial, the trend is quite clear that really the banks are holding up much better than NBFCs. We are also seeing diversified non-lenders continuing to do well, whether they are capital market companies, platform companies, and even insurance companies. I think large banks and insurance companies within the financial pack look the most interesting to us besides the platform companies.
My opinion, where we found good, bets on especially PSU banks and some of the banks where, without much change in the business, dynamics, you've seen good 40% kind of 30 to 40% kind of corrections. We find that pocket very interesting, and that's where we've done a little bit of shopping.
Okay, so that's the outlook coming in on the entire banking space. But let's shift focus. Sameet, coming to you now. You've picked out Info Edge for us on the charts. So when I pull up the charts last 6 months, the stock seems to have done pretty well. Year to date also, the stock has done pretty well. And see last 6 months, 41% return coming in. Tell us if you see this rally sustaining for the stock going ahead, and what are the levels that you're spotting on the charts?
Yes, clearly one of the few stocks, which has been bucking the trend of late and has not corrected much in the, recent broader market correction that we saw. In fact, in last couple of weeks, the stock seems to have regained its, upward momentum, and it's challenging its record highs now. So, looking at the overall, price and volume activity, it has been quite steady, moving upwards, and now we expect the stock to surpass its previous highs and head towards 8,800, and even it can clock 9,000 marks. So overall, the bias remains positive. Any dip is likely to get bought into. 8,200, 8,000 would act as a very strong support.
All right, moving on from Info Edge to the next counter, which is Biocon, which was up 3% today. It has marked its 7th consecutive session of gains. In fact, today it has given up the morning gains, but nonetheless trading with gains of 2.8% right now. Now, this is in the back of the fact that US FDA has approved Biocon Biologics Yesentech, a biosimilar to J&J's Stelara. Now, Biocon Biologics gets USDA node for Yesentech to treat Crohn's disease and ulcerative colitis. Now, Yesentech, a monoclonal antibody, is approved for the treatment of Crohn's disease, ulcerative colitis, plaque psoriasis, and psoriatic arthritis. And on the back of this, Biocon is in focus today on the back of the USDA approval coming in on the drug. It is up 2.9%.
Okay, good moves coming in for Biocon as well, but Sameet can't say the same about PVR Inox, because while today it's been holding up smartly, it's been a series of trouble coming in for the stock, at least on the year-to-date basis. It seems under pressure. Tell us, what's the outlook going ahead? Because fundamentally, if you take a look at this stock, we have been hearing commentary that the footfall has not been that great since quite some time now. Tell us, at least on the technical terms, what do you think the chart is looking like, and where do you think the stock is headed?
Definitely, it's been a bumpy ride for this particular counter over the past, 5 to 6 months. But recently we saw this stock correcting from the levels of 1730 or levels towards its 200-day simple moving average level of 1450. The price correction seems to have arrested around this, important support zone. Stock has been consorting around it, hovering around this important mark. Seems to have formed some base, at least a short-term base around 1450, and is now moving higher. So maybe with a broader view, the picture does not change, but at least with the short-term view, we expect some sort of relief in this counter, wherein the stock can head towards 1650, 1680 kind of mark. Overall, if you see, there is a defined range, 1750 to 1700 on the higher side. 1450 remains to be a very critical support for this counter. So long as it holds 1450, you might see some consolidation with a positive bias in this counter.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back with some more buzzes in trade.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the big buzzes in today's trade, and let's throw the spotlight on Home First Finance. Now, this stock has been in focus ever since the opening bell on the back of a block deal, because Home First Finance had 9.83% equity traded in a block deal. Shares of this company slipped as low as 7% in early trade after nearly 19 million equity shares changed hands on the counter via block deal this morning, and as many as 18.79 million to be precise equity shares, representing 21% of the total equity of Home First changed hands on the exchange. This is what the data showed. Now, of course, the names of the buyers and sellers cannot be ascertained immediately. We'll have more details on this once the market closes today. But, however, what we're understanding from sources is that promoters True North, Orange Club and Aether have sold 13.1 million shares via block deal. We'll get back to you with the precise amount and the precise name of the buyers and the sellers post the closing bell today. That's when we'll have more details. But also, what we understand from sources is that Nomura and Kotak Securities are the lead bankers on this block deal. So, well, lots to watch out for, in fact, after the market closes to get the precise details of the buyers and the sellers. But nonetheless, on the back of that block deal, the stock seems to have recovered beautifully from the day's lowest point, 1% higher as we speak.
All right, that's Home First Finance on the back of that news flow, trading with gains of 1%. But coming to you, Sameet, what's not been doing well in the last 1 month, that's been in a corrective phase, is HDFC Life Insurance Company. From here on, do you see a breakout coming in on the charts?
In fact, unfortunately, this stock is on the verge of a breakdown. Overall, if you see, stock has already seen a sharp cut from the levels of 700. And now it is challenging its 200 simple moving average. In case if the stock slides below 635 and sustains below it, that would confirm breakdown, and the stock would extend this fall towards 600 or sub 600 territory can be tested in the coming week. So overall, the bias remains negative till the time this stock does not surpass 685. It is a sell on rise kind of candidate, and any bounce back is likely to get sold into. So 680, 685 would act as a very strong resistance, and on the low side, as I said, 635 would be seen as a make or break level.
So those are levels to watch out for HDFC Life. But let's keep it going with the insurance space, because as the government is all set to introduce Insurance Amendment Act in the Parliament, sources tell us there may be changes in the way agents function. ET now has learned from the government learns that the government may propose removal of restriction on representing multiple insurers in the new amendment bill, which will allow agents to represent multiple insurers. Anurag Shah is joining us with more details on this. Anurag.
So for the Insurance Act amendment, government is proposing for removal of restrictions for agents to work with multiple insurers. Presently, the rules allow that agent can work with only one life insurance company, one general insurance company, and one standalone health insurance company. But the government has proposed to remove these restrictions, and in the draft bill, government has proposed that multiple agents can work with multiple insurance companies. To have the innovation in the insurance industry and to give the flexibility to the agents to work with multiple insurance companies. So if we talk about the share of business through individual agent for the listed companies, then LIC get around 95% of their business through agents. For SDFC Life, 18% of their APE is through agent. For ICIC Pru, around 30% of their new business is through individual agents, and for SBI Life, it's around 25%. So agents play an important role for insurance companies for their premium collection, for their new business, and now government is proposing to give them flexibility that an agent can tie up with multiple insurance companies.
All right. Moving on from that news, thanks so much for joining us, Anurag. But moving on to Jinai. Jinai, Adani Ports is in focus today. Tell us, what's the news flow here?
Well, so the company come up with an outlook of November 2023 report. If you look at November 24, the company handled about 36 MMTT, which was up 21% year-on-year basis, and this was mainly driven by containers. The company also handled about 293.7 MMTT of total cargo for this YTD basis, up 7% year-on-year basis. Now this growth was supported by containers, which was up 19% year-on-year basis, followed by liquid and gas, which was up about 7% year-on-year basis. Now if you talk about YTD, then November 2024 until November 2024, the logistics rail volumes grew by 10% year-on-year basis. We also have a note where InCred upgraded the stock, and they've given an ad rating with the target price of 1329. They believe that the company's 5-year vision seems ambitious. Also, the recent report, the company has its unique value proposition there with an impressive automation plans for the company going ahead. And if you look at the stock price, currently it's trading about 1.3% as we speak.
Okay, so that's Adani Ports in focus, but let's shift focus. And Sameet, you picked out Grasim for us on the charts, another one from the cement space. And last 1 month, last 6 months, decent returns coming in rather on the charts. Tell us, what's the outlook going ahead? What are the levels that you're spotting?
See, in fact, the entire cement space has been buzzing since morning. If you look at the Grasim Industries, this stock has, been moving in a consolidation mode since last 4 odd months. And today, after forming a good base around 2500, the stock is now showing some early signs of revival. Stock has already broken out from its, near-term resistance level of 2600, and the kind of volume activity that we have been witnessing since morning, it seems that the stock is likely to head towards 2780, 2800 in coming days. So bias remains positive in case of Grasim, and any dip is likely to get bought into, wherein 2650 to 2600 would act as a very strong support.
All right, that's Grasim Industries on the charts. But moving on to HUL, that's in focus today on the back of brokerage notes. Now, first up, we have a couple of brokerage notes come out on the counter, especially Goldman Sachs, that's maintaining a neutral with the target price of 2,775 rupees. They feel a holistic plan to rapidly grow the portfolio is likely to address the affluent India. They are dialing up their product superiority across their portfolio. And also the near-term volume growth is likely to remain muted, but pricing will pick up and the margins are likely to be stable for the company. UBS is also maintaining a neutral, and they've cut the target price for HUL to 2,800. They feel that the management is optimistic on the medium-term growth prospects in India, but each business segment will have to play a distinct role if growth had to happen, and HUL expects a near-term demand to remain stable. Morgan Stanley is maintaining an underweight on the counter with the target price of 2,110 rupees. They feel that they like the shift in the management style from assertive to aggressive, but they think it is a multi-year task to fulfill the plan, and on the back of that, they're maintaining an underweight. Axis Capital has retained their ad and maintained the target price of 2,850 rupees, but on the back of target price cut coming in, also on the back of the underweight by Morgan Stanley, HUL is reeling under selling pressure with cuts of 0.5%.
Okay, so that's HUL in focus on the back of multiple brokerage notes coming in after the capital markets day on Friday. But let's move on and talk about the entire auto space, because the autos today have been in focus on the back of the auto sales figure that we saw coming in November. Now, just to run you through what these numbers have looked like, you have Escorts, Hyundai and Hero Motor that have missed what the street was expecting. In line, however, Tata Motors, the commercial vehicle segment, has been in line. TVS Motors, the RE segment, which is the Royal Enfield segment, has been pretty in line with the street expectations. Bajaj Auto, M&M Tractors and Ashok Leyland have done pretty decent in the month that went by. However, what beat the street expectations and outperformed everybody else was Tata Motors, passenger vehicles, Maruti Suzuki, Eicher VECV and M&M Auto. You can see similar reactions coming in on the stock price as well. That's what the street is reflecting on the prices as well. It's been a mixed bag so far, but it's been individual outperformers. The two-wheeler industry continues to experience growth post the festive season. TVS and Bajaj Auto have outperformed in that category. You have tractor demand continuing to recover. That's another positive coming in. However, you have the commercial vehicle sales that have continued to remain subdued. But in the passenger vehicle segment, Maruti Suzuki has surprised. So it's a mixed bag coming in, and you can see that on the stock reactions today as well.
Absolutely, and staying with the auto pack then, Sameet, Ashok Leyland is the name that you picked out for us on the charts. This counter has started giving some gains in the last 1 month. From here on, do you see this up move continue?
See, overall, if you see Ashok Leyland has, seems to have completed its recent price correction. But, overall, if you see the entire autos piece is under a bit of pressure, and overall, Ashok Leyland is the one stock that has formed a good base around 210. Now, there's a defined range for this counter. 230 to 32 should be seen as a very strong resistance. Once the stock surpasses this level, we could see a breakout happening, and then probably the stock would continue its positive, structure. On the low side, 220, 200, 22 would be seen as important support. In case of a breakdown below this level, you could see extended correction in this counter. So 235 on the higher side, 220 on the low side. These are the important levels to watch out for, which are likely to dictate the near-term direction.
That's the outlook coming in on the charts for Ashok Leyland from Sameet. But Jinay, coming to you, you've picked out KEC International. This stock in focus on the back of an order win. So tell us everything about this order win.
Yes, KEC International is focused. The company has secured a new orders worth around 1,040 crores. Now, this is mainly in the transmission and distribution segment. This is for the international markets. If you look at the details, it is for supply of tower hardware and poles in Americas. It's about 220 kilovolt of transmission lines in CIS. Now, with this, the total year-to-date order intake for the company stands at 17,300 crores. Reflecting a growth of about 75% year-on-year basis, and that's why we also saw the stock gapping up today morning. But however, today it's now a bit retraced.
All right, moving on to the next counter that's in focus today, that is Titagarh, which is on the back of a brokerage note by HSBC that is maintaining a buy, but they've cut the target price to 1,425 rupees from an earlier 1,980 rupees. And I feel that with the state elections behind us, awarding of metro rolling stock has resumed, and opportunity pipeline is pretty strong for the company. The execution of existing metro and Vande Bharat orders are slower than earlier expected, leading to some of the estimate cut target on the lower estimates and valuation multiple. On the back of that, even though they're maintaining a buy, HSBC had cut the target price, and on the back of that, Titagarh Rail is declining in trade, with cuts of 1%.
Okay, so that's the reason why Titagarh Rail is in focus and slightly under pressure as well. But on that note, we'll wrap it up on this edition of Market Fatafat. Jinay as well as Sameet, thanks for joining us. And Aditya, of course, in the previous segment. We'll let you go on that note, and we'll take your leave. But you stay tuned to the channel, because Closing Trades is up next.
If you like this video, then like, share and subscribe to ET Now.